So welcome to Jumbo IS and welcome to Economics lecture number 10 of this lecture series called Prelims Powerplay 2026. Through this lecture series, if followed correctly, you will revise your entire syllabus for UPSC Prelims, the entire syllabus, static as well as current affairs. Now today is the last lecture of economics portion of phase 1 of this lecture series. Okay, we'll be covering this lecture series in 3 phases. Your entire revision would happen in 3 phases. Currently phase 1 is going on. We have covered polity and today is the last lecture of economics. Now after this there will be a test of economics because complementary test series is also going on. Okay, so make sure you revise all the previous 10 lectures before giving the test. Okay, tests are extremely important if you really want to solidify your revision. By the way, you don't have to refer to any of the other sources, no PT 365, no monthly current affairs compilation, just follow this lecture series. Okay. Now for the notes, for doubts related WhatsApp groups for the test series, you have to register for this lecture series and the registration details are given in the comment section below. In case there is any doubt, well, there is also a number, just WhatsApp us on that number, okay, if you want to join this lecture series. Okay, so today is lecture number 10 of economics and our today's topic of discussion is GST 2.0. You all must have heard about this in the news that Prime Minister Modi said that I want to gift to my Indian citizens a Diwali gift. Okay, on the occasion of Diwali, government launched GST 2.0. So it is basically a reformed version of GST. Or I should say some reforms were conducted in GST so that ease of paying taxes, tax burden on consumers, all of this gets rectified. Okay, so GST 2.0 basically means certain reforms conducted in GST. Now GST in India began in July 2017. Now July 2017 up till now was GST 1.0. Okay, and after these reforms, now it has become GST 2.0. So in this lecture, we will talk about GST 1.0, some basic facts about GST, which are important for you to remember, okay? And then we'll talk about GST 2.0, which means the reforms conducted in GST regime. And some benefits of GST 2.0, some not so good things that are happening because of GST 2.0, or some challenges that are occurring because of GST 2.0, okay? All of this entire topic shall be covered today. So pay close attention because it is an important topic. It was discussed in the news. Government launched it in the news with a lot of fanfare. Government launched this GST 2.0 with a lot of fanfare. Okay, so that is why it becomes pertinent for us to know everything about it. All right, so let's begin GST 2.0, today's topic. So economics, lecture number 10, GST, Goods and Services Tax 2.0. Now, in the recent meeting of GST Council, 52nd or 53rd meeting of GST Council, and GST Council is the highest decision-making body with respect to GST. So this decision of launching GST 2.0 was taken in GST Council. So in its latest meeting, GST Council launched GST 2.0. And I told you that GST 2.0 is nothing but reforms in the earlier GST regime, right? So let's talk about this. And then we'll talk about GST 1.0 first, okay? And then we'll talk about the reforms, the upgradations made to GST, previous GST regime, GST 1.0, okay? So first, let's focus on the previous GST regime, okay? So GST 1.0. Now this GST regime, what did GST regime do? You all know this about, know about this, okay? Already you know about this. That, well, in India, before GST, there were a lot of indirect taxes. All those indirect taxes were subsumed under GST 1.0 or GST, okay? So all indirect taxes were subsumed under one GST. So the multiplicity of taxes, there were so many taxes that businesses had to pay. They were all subsumed under one GST. Yes, everyone knows that. Now, center has certain powers to tax people, businesses. State has certain powers to tax businesses. And these powers come from the Constitution of India. Therefore, to bring in GST, we had to amend the Constitution, right? So it was introduced through 101st Constitutional Amendment Act, okay? And it was implemented since July 2017. Clear? GST 1.0 is applicable on the supply of goods and services, replacing multiple indirect taxes. Before GST, there was value-added tax, service tax, excise duty, many other duties. They were all subsumed under GST. Clear? Now, GST was implemented through 4 tax slabs. So there were certain goods on which tax was 5%. There were certain goods on which tax was 12%, then certain on which 18%, and then certain on which it was 28%. So some goods were taxed at 5, some were at 28. Okay, these are known as the 4 slabs. Now within the GST regime, there were different kinds of GST. Okay, so there was CGST for central government, SGST for state government, UTGST for UTs, okay, union territories, and if the trade is between 2 states, for interstate trade, there was IGST. Okay, so let's suppose I'm talking about this pen. This pen is sold, okay, and on this pen, GST would be applied. Let's suppose this pen comes in 18% slab. Okay, now if this pen is manufactured in Maharashtra and is sold in Maharashtra, okay, then what would be the tax on this? So this would be the price of this pen. It is made in Maharashtra, sold in Maharashtra. So on this pen, and it comes under 18% slab. So there would be 9% CGST plus 9% SGST. Okay, 9% CGST would go to central government, 9% would go to state government, Maharashtra government. Okay, very simple. But if this pen was made in Maharashtra and sold in Uttar Pradesh, okay, made in Maharashtra, so from Maharashtra it would be sold to UP, then that comes under interstate trade, IGST. So X would be the price of this pen, and then 18% IGST would be levied. Okay, half of this IGST would go to center, half of this would go to the state. Clear? Simple. Okay, so for interstate trade, there is IGST, it would be 18%. For intrastate, within a state, CGST, SGST, and for UTGST, if it is a UT, then it is a UTGST. Very simple. You understand there are 4 slabs, there are 4 types of taxes depending on the kind of trade there is. Yes, one more thing. This pen was made in Maharashtra and sold in Uttar Pradesh, and 18% GST was levied on it. 9% went to center, 9% went to state. Which state? Which state will get the tax for this pen? Okay, 9% IGST for this pen. Which state? Maharashtra or UP? So it was decided under GST that the destination of this pen will decide which state will get the GST. Okay, so the destination of this pen is it was made in Maharashtra, sold in UP. So UP is the destination. That is why UP will get this 9%. That is why GST is also known as destination based tax, because in case of interstate trade, the destination state, the state where the good is being consumed, gets the revenue. Simple. Okay. All right. Now, most of the taxes were subsumed under GST, but still there were certain taxes that were left out of GST, and still central government or state governments collect those taxes, and they are not part of GST. They are not subsumed under GST. They are collected separately. Now, what are those taxes? So there are certain central taxes. There are certain state taxes, okay, which are not part of GST. You need to remember this. So basic customs duty, which is levied by center, is not part of GST. Basic customs duty is levied on import of goods. Okay. Then central excise duty on petroleum products, petrol, diesel, that is not part of GST. Excise duty, center has the power to levy excise duty on alcohol, liquor also. That is not part of GST. Okay. Then now states, state taxes on liquor, alcohol and liquor. So certain states levy VAT on liquor, sales tax, excise on liquor, alcohol basically, right? These would not be part of GST, SGST or any GST, okay? Stamp duty, when you transfer property, there is a stamp duty that you have to pay. That is not part of GST, okay? Property tax, which is generally collected by municipal corporations, that is not part of GST. Electricity duty, motor vehicle tax, road tax, when you register a car in your name, you have to pay this tax, not part of GST. Professional tax also, taxes on professions, which can be with panchayats, municipalities or state governments. These are not part of GST. Clear? Simple? Okay. Now, certain key features. First of all, GST is a multi-stage tax. What do you mean by multi-stage? Well, you remember we discussed in the previous lecture or previous to previous lecture we discussed about value chain, right? We discussed about value chain. Let's suppose this pen is there. This pen starts as plastic, then it is given a shape of a pen, then ink is filled in this pen, then it is finally packaged and sold. This entire thing is called the value chain of this pen. And the plastic manufacturer is a different company, shape giving company is a different company, ink company is a different company. At all these stages, GST would be levied. So this plastic manufacturer will sell plastic to the person who makes the shape of the pen, right? So GST would be levied here, levied here, levied here, and finally we pay GST, right? That is the case. So it is a multi-stage tax and it is levied at the consumption of goods and services. So it is a consumption-based tax. Okay, this is feature number 1. Remember this. This we have already discussed. It is a destination-based tax. Okay, and then tax with 4 slabs. Okay, tax with 4 slabs: 5%, 12%, 18%, 28%. Right? These are the 4 slabs. You know why? Earlier, when the idea of GST was floated, like 20 years back, the idea of GST was floated. Back then, only 2 rates or 1 slab was discussed. Okay, that GST will have only 1 slab or 2 slabs. But then government came out with 4 slabs. Why? You know the difference between progressive and regressive taxes. Progressive taxes are those taxes are those taxes where the tax burden increases with your income level, like income tax. As soon as your income increases, the income tax on you also increases. Whereas regressive taxes are those taxes whose burden is more on poor people and less on rich people. So for example, I'll buy this pen. This pen is 10 rupees and GST on it is 1 rupee. So I'll pay 11 rupee for this pen, right? If I'm a poor person who earns 100 rupees per day, 11% of my income would go towards buying this pen. But if I'm a rich person who earns 10,000 rupees per day or 1,000 rupees per day, then 1% of my income goes towards paying for this pen, right? So the burden, because whether it's a rich person or a poor person, everyone has to pay 1 rupee tax. For rich person, 1 rupee is nothing, but for poor person, it is a lot. So tax burden is more on poor than on rich. This made a tax regressive. Okay, but we tried to reduce the regressive nature of GST. How? Well, essential goods are bought mostly by poor people. That would be taxed at a lower rate. And luxury goods, which are bought by rich people, were taxed at a higher rate. Right? So you tried to reduce the regressive nature. Luxury goods would be taxed higher, essential goods would be taxed lower. So you try to reduce the regressive nature of GST. That's why 4 slabs were added. Okay, and then, well, GST removes cascading effect. Now, some of you already know about cascading effect, but if you don't worry, we'll have another lecture explaining GST and cascading effect. Though those who have already watched our economics lectures, they know what cascading effect is. So I'm assuming you know about this. Cascading effect is tax on tax. That was there when GST was not there. Okay, but with GST, cascading effect came down. Tax on tax, tax burden got reduced. If you have any problems with this word cascading effect, what does it mean? Just have some patience. We will definitely tackle it sometime later. And we have already tackled it in our Gurukul lectures, okay, economics lectures. All right. Now, along with this 101st Constitutional Amendment Act, there was a body formed. That body was called GST Council. This would be the highest decision-making body. Okay? And to establish this body, well, you amended the constitution and added Article 279A in it, so that this council becomes a constitutional body. And this is the highest decision-making body when it comes to GST. So let's talk about GST Council, okay? So GST Council. So it was established under Article 279A. It is the apex decision-making body on GST matters. Okay, apex, the highest decision-making body. Article 279A was introduced through 101st Constitutional Amendment Act. Clear? Now the thing is that GST subsumed within itself central taxes as well as state taxes. Therefore, state governments wanted a say in GST regime, setting of GST. That is why state government members are also part of GST Council. Okay, so GST Council is chaired by Union Finance Minister, and State finance ministers are its members along with Union Minister of State. Okay, so there is a cabinet minister and a minister of state. So Union Finance Minister would be the chairman. Minister of State, junior minister to Union Finance Minister would also be a member. And every state government in India would send their finance ministers generally. These would be the members. Now, every decision in GST Council requires 3/4 vote. Every decision requires 3/4 vote. That is 75% vote. 50% won't do. You require 75% vote. But the catch is that 1/3 vote, 33% votes lies with center, and the remaining 66% votes lies with all state governments. So if center doesn't agree with you, okay, no matter, well, even in the case where all state governments are opting for one decision and center disagrees with that decision, well, that decision won't be passed because you require 75% vote. 33% votes lies with center. So center should be in agreement with all decisions. In a sense, center has a veto because it has 33% votes. So remember this fact as well. And GST Council, as per the law, must meet at least once every quarter, that is 3 months. Though it can meet more times also in cases of emergencies, but it has to meet once every 3 months in every quarter. Clear? Now, functions of GST. Like I said, it is the apex decision-making body, the highest decision-making body, but still you need to know its functions, okay? So it determines tax rates and exemptions, certain which taxes would be exempt, which won't be, what are the different tax rates, whether the spend should be in 18% or 12% slab. Everything is decided by GST Council. Then it also advises on making GST laws and principles, okay? Then, if there is a dispute between center or states or between two states with respect to sharing of GST, that dispute is resolved by GST Council. Then it recommends special provisions for certain special states. Okay, it monitors GST compliance, whether GST is being followed, implemented properly in every state. Okay, and make sure that no one is evading taxes, not paying taxes on time. Plus, it also sets threshold limits. Okay, you see, there is a threshold. If your annual turnover is less than 50 lakh, then you don't have to pay GST. So what will be this threshold? 50 lakh, 75 lakh, 1 crore, that is set by GST. Simple, okay? Now, why do you think we had to change GST 1.0? Okay, why did we conduct reforms in GST 1.0? If GST 1.0 was working fine, properly, then there wouldn't have been any need to introduce GST 2.0. But that was not the case. There were some issues in GST 1.0. That's why we came out with GST 2.0 and called it the Diwali gift, right? So what were those issues? Well, they are given in a detailed manner in your notes. So do check out your notes. But I'm going to explain these issues to you. So GST Council used to change GST regime very frequently. There were frequent policy changes. And because there were frequent policy changes, very quickly, today this pen is in 12%, then again in 18%, there were so many changes that there was no stability in the business environment. This was one problem. Then, well, GST is paid through GST portal. There were some technical glitches. Many people have complained against it. Then higher compliance costs. For GST regime was bit technical, okay? And yes, it simplified earlier tax regime, but it was a little technical. And for small businesses, it was really difficult to pay GST every month. So it increased compliance cost. Then inverted duty structure. Well, what do you mean by inverted duty structure? Well, inverted duty structure means that you take raw material, let's suppose plastic, and then you make a final good, pen. Raw material plastic, final good pen. The tax on raw material was more than the tax on final good. So on raw material, let's suppose the tax was 28% and the tax on final good was 5%. That means if you are manufacturing this pen in India, you will buy raw material. That will make it expensive for you to make this pen because you have to pay so much tax on raw material. It is better that you import this pen directly from abroad. If you'll import this pen directly from abroad, the sale of this pen would be 5%. There is no problem. But if you're making it here, then you'll have to pay a lot of tax on raw material. Do you think it's a good idea that we are encouraging imports and discouraging local manufacturing? That is a bad thing. inverted duty structure is a bad thing. And this is a problem in GST 1.0. And GST 2.0 tries to rectify it a little. Okay. And delays in fund release and supply chain disruptions. The funds, the refunds that accrue to businesses, they were delayed they were delayed quite frequently. So these were some of the issues. Clear? Now comes the Diwali gift, GST 2.0. So what reforms were undertaken in GST 2.0? Okay. The biggest reform is simplifying tax slabs. There were 4 tax slabs. Now, well, you have changed it to 2. So simplified tax structure. This is the change, the first change. 2 slabs instead of 4. You know, there were 4 slabs, 5, 12, 18, 28. Now there are only 2 slabs, 5% and 18%. Sorry, it's not 8, it is 18%. Okay. 5% for merit goods, essential goods, and 18% for all the others. But if we are talking about sin goods, goods that are bad for consumption, like cigarettes or addictive substances, or goods that are luxury, well, an additional 40% rate. Luxury goods would have to pay a lot of taxes. Okay, additional 40% rate applies to luxury, sin, and demerit goods. But generally, for all the other goods, there are 2 slabs only. Okay, so now complications have reduced. Okay, then rate rationalization. What used to happen earlier was that certain essential items like medical insurance and all, they were taxed at 18%. And certain luxury, not luxury, but items that are generally consumed by rich people were taxed at 5%. You wanted to reduce the regressive nature, but there were certain items that were taxed or put in a wrong slab. That was changed. So about 90% items have seen reduced tax rates, 52 items have been granted total tax exemption, making essential items more affordable. So rate rationalization has happened. That is why it was a Diwali gift. Okay, things have become cheaper because of reduced tax. Then there were certain structural corrections. It tries to fix inverted duty structure, making the flow of input tax credit easy. So inverted duty structure, well, they tried to reduce it. They have not reduced it completely. By the way, let me tell you this. But yes, they have tried to rectify this problem of inverted duty structure. Then compliance. You remember, for small businesses, compliance cost increased. Well, now they have made certain reforms and they have made it easy to pay GST. So compliance processes have been simplified and made more transparent, especially for MSMEs. Then certain administrative reforms. Look, if you think that you have been wrongly taxed, then you can raise a dispute. Okay, you will raise that dispute with the tax authorities. Tax authorities will give a verdict, right? But let's suppose you do not agree with the verdict of tax authority. Then what will you do? There was no way out. But now you can appeal against the decision of tax authority in GST Administrative Tribunal. This has been made operational. So now for disputes with tax authorities, you can go to GSTAT. It has become fully operational in December 2025 to expedite dispute resolution and reduce cases, GST related cases. The only option that you had was courts. Now you don't have to go to courts. You will have this specialist body called GSTAT. Clear? Now, how has been, like, remember I told you that ease of compliance, the process of paying taxes has been made easier. How? There are certain examples. Faster GST registration. So if you're opening a company, you have to get a GST number. GST registration has been reduced from 7 to 10 days to 3 working days. Then all the refunds that are generated to your company, well, that has been automated. Enhanced GST portal. Remember, technical glitches, they won't happen anymore. Okay. Improved processes for refunds and registration. So certain other ease of paying taxes has been enhanced. All right. Now, what are the benefits of this GST 2.0? Now, these benefits are listed in your notes in detail, though I'm going to discuss only some benefits. Okay. So what are those benefits? Well, it will boost consumption because now tax on essential items would get reduced. These essential items would now become cheap, or their cost would come down. And because their cost will come down, this will definitely boost demand for these goods. Now people will buy more and more of these goods. And when people will buy more and more of these goods, well, these firms who are producing these goods will become profitable. So it will boost consumption. GST 2.0 is expected to boost domestic consumption by making essentials cheaper and simpler to buy, right? Tax burden on people would get reduced. It reduces the tax burden on common man and supports businesses with simpler compliance. It makes it easier to pay taxes. Okay. Plus, if India's taxation regime is stable, easy, then foreign companies would also want to come to India and establish their business. So that would improve FDI also, attract foreign investment also. Plus, there are many more advantages. Do check them out from the notes. By the way, about GSTAT, you remember GSTAT has been made operational from this coming December. Okay, so it is the second appellate authority established under Section 109 of Central GST Act. Okay, it will function through a principal bench. So a principal bench would be in New Delhi. Plus, in different regions of India, there would be 31 benches. Okay, state benches, so that anyone can approach. No, I mean, if you're in Tamil Nadu and if you have a GST dispute, you don't have to travel to Delhi. Okay, there are 31 state benches as well. Each bench of GSTAT will comprise 2 judicial members, former judges, 1 technical member from center, 1 technical member from state, so that both center and states have a say. And then GSTAT e-courts portal has been launched, a digital platform to enable taxpayers to file appeals online, complaints online. Again, making it easier to raise a dispute. Clear? So that would be all as far as GST 2.0 is concerned. But certain challenges with respect to GST still exist. Those challenges are mentioned in your notes. So do check them out as well, because, well, the next is your test. And in that test, I can ask questions with respect to these challenges as well. So never miss any word, not even a sentence, any word of your notes. Each and every word of your notes is important. You have to revise and memorize it. Okay? Yeah. So that would be all. With that, we conclude today's session. So thank you so much for watching, everyone. And I'm sure, dead sure, that this lecture series is adding value to your preparation, provided you are consistent and regular and you memorize this lecture. After every lecture, you memorize it from the notes provided by us. If you're doing that, if you're giving tests on time, if you're asking your doubts, well, this lecture series will definitely make sure that you clear your prelims this time. Okay? So on that note, I'll be signing off with the promise of seeing you again with another topic in this lecture series called Prelims Powerplay. Thank you, everyone.